Renowned financial expert Dave Ramsey has long advocated for the potential magic of turning a modest sum, such as $100 into significant wealth through strategic investments in REITs or the real estate investment trusts. Hi, welcome to Nordel Media channel. In this video, we will try to understand the ins and outs of REITs and uncover Dave Ramsey's investment wisdom that transforms humble beginnings into financial prosperity. Before we delve into the intricacies of Dave Ramsey's investment strategy, let's establish a foundational understanding of what real estate investment trusts or REITs are. First off, what are REITs? A real estate investment trust, or REIT, is a company that owns, operates, or finances income-generating real estate. REITs provide a unique way for investors to access the real estate market without having to directly buy or manage properties. These trusts own a diverse range of income-producing assets, including commercial properties like office buildings or shopping centers, residential properties like apartment complexes, housing developments, and infrastructure such as cell towers or data centers. One key characteristic of REITs is their obligation to distribute at least 90% of their taxable income to shareholders in the form of dividends. This feature makes REITs an attractive option for income-focused investors seeking regular cash flow. There are various types of REITs, including equity REITs, mortgage REITs, and hybrid REITs. Equity REITs primarily own and operate income-producing real estate, while mortgage REITs invest in mortgages and mortgage-backed securities. Hybrid REITs combine elements of both. Now, how do REITs work? Investors can buy shares of publicly traded REITs on stock exchanges, much like stocks. Private REITs, on the other hand, are not traded on public exchanges and often have different entry requirements. When individuals invest in REITs, they become shareholders and are entitled to a portion of the income generated by the real estate properties held within the trust. REITs can offer diversification benefits to invest portfolios as they provide exposure to the real estate market, which may have different risk and return characteristics than traditional stocks and bonds. Additionally, the requirement to distribute a significant portion of income as dividends can make them an attractive option for income-seeking investors. Now that we have a foundational understanding of REITs, let's explore how Dave Ramsey advocates turning a modest initial investment into substantial wealth through strategic investment in these trusts. Dave Ramsey's investment magic with REITs. Start small, dream big. One of Dave Ramsey's foundational principles is the idea that anyone, regardless of their financial standing, can start investing with a modest amount. In the context of REITs, this means that even if you have just $100 to spare, you can initiate your journey towards wealth creation. The accessibility of REITs allows individuals to dip their toes into real estate investments without requiring a substantial upfront capital typically associated with property ownership. Ramsey often emphasizes the power of consistency and long-term commitment. By starting small and consistently contributing to your REIT portfolio, you can harness the magic of compounding over time. As your investment grows, the compounding effect accelerates, turning your initial $100 into a more substantial sum. Leveraging dividend reinvestment. One of the distinguishing features of REITs is their obligation to distribute a significant portion of income as dividends. Dave Ramsey encourages investors to leverage the power of dividend reinvestment to maximize their wealth-building potential. Instead of cashing out dividends, reinvesting them by purchasing additional shares allows investors to benefit from compound growth. Let's illustrate this with an example. Suppose you invest $100 in an REIT with an annual dividend yield of 5%. In the first year, you would receive $5 in dividends. By reinvesting this $5, you now have a larger investment base for the following year. If the REIT's value increases, the dividends paid in the second year would be based on the higher investment amount. This compounding effect continues to snowball over time, significantly boosting the overall return on the initial $100 investment. Diversification for stability. Dave Ramsey often emphasizes the importance of diversification in building a resilient investment portfolio. REITs offer an excellent avenue for diversifying a portfolio as they provide exposure to the real estate market, which tends to have different risk factors than traditional stocks and bonds. By allocating a portion of your investment funds to REITs, you spread risk across different sectors of the economy. For instance, an equity REIT focused on residential properties may perform differently than a mortgage REIT investing in real estate debt. This diversification can help mitigate the impact of a downturn in a specific segment of the real estate market, contributing to overall portfolio stability. Capitalizing on market growth. Real estate has historically been a resilient asset class, appreciating over time. Dave Ramsey's investment strategy with REITs involves capitalizing on the potential for market growth in the real estate sector. As population and economic activities expand, the demand for real estate often follows suit. By investing in REITs that own income-generating properties, investors position themselves to benefit from the appreciation of real estate values over the long term. Ramsey advocates for a patient and disciplined approach, focusing on the fundamental growth drivers of the real estate market. By aligning your investment strategy with the broader trends in the real estate sector, you can tap into the inherent wealth-building potential that comes with the appreciation of property values. Weathering economic storms with stability. Real estate as an asset class is known for its stability and resilience, even in the face of economic downturns. Dave Ramsey's investment philosophy with REITs involves recognizing the defensive qualities of real estate as an investment. During periods of economic uncertainty, real estate often serves as a reliable source of income through consistent rental payments, providing a buffer against market volatility. REITs that own a diversified portfolio of properties across different sectors and geographical regions can offer stability during challenging economic times. As tenants continue to occupy properties and pay rent, the income generated by REITs remains relatively stable. This defensive characteristic makes REITs a valuable component of a well-rounded investment portfolio, aligning with Ramsey's approach to weathering economic storms with strategic and stable investments. Dave Ramsey's investment magic with REITs demonstrates the transformative potential of strategic, disciplined investing, even with a modest starting amount. By understanding the fundamentals of real estate investment trusts, leveraging the power of dividend reinvestment, embracing diversification, capitalizing on market growth, and recognizing the stability offered by real estate, investors can turn a humble $100 into substantial wealth over time. As with any investment strategy, it's crucial to conduct thorough research, assess risk tolerance, and align investment decisions with long-term financial goals. Dave Ramsey's advocacy for accessible and strategic investing with REITs serves as an inspiring guide for individuals seeking to build wealth steadily and consistently, one real estate investment at a time. What do you think about this topic? Share your thoughts in the comment section below. Don't forget to like, share, and subscribe to Nordel Media's channel. I'll see you in the next video.